Hey everybody, it's Greg Belvin again with Real Estate News Fort Worth. I'm here today with probably one of the best finance guys you'll ever meet, Jonathan Sandhu, and he is going to share with us what's going on as of right now in the middle of this COVID-19 stuff. And we are both in agreement that this is the perfect storm. If you're thinking about buying, the sellers are that have been trying to sell, have been desperate to sell. And rates are like historic lows, but Jonathan's a guy, he knows all the answers. So let me turn this camera around here, if I can find the right button here, and that's not it, and that's not it, oops, and let's see, where'd it go? Oh, here, there you go. We'll do it this way.
Hey everybody.
Yeah.
This is Jonathan Sandhu here. I'm with a company called NRL Mortgage, Houston-based company. I can hold it, yeah. And I've been in the mortgage industry for 4 years. I'm a loan originator. And like Greg was saying, right now is the perfect time to buy. And it's kind of a perfect storm with the way that the real estate market has been trending. Obviously with all the changes in the pandemic from COVID-19, it is severely affecting the stock market, bond market, treasury bond, all the markets that we use for determining interest rates. And so we have seen quite a few changes. I'm sure you probably heard in the news. A lot of different banks and financial institutions are raising their minimum credit score, mostly for government loans, but even really all across the board, the standards are just starting to get raised. And so what's happening is, all these other mortgage companies like myself, we had to raise our standards as well. But as of May 1st, just a few days ago, we were able to lower our minimum credit score. So where it was 640, now we're down to 620. So it's starting to open things back up. And we're starting to see small shifts in the way that we're able to do business. So definitely right now, if it's something that you're thinking about, definitely need to contact a professional like Greg or myself to see what your options are, because you don't want to wait until or next year or even a few years if it's something that you are thinking about, just because we don't really know where the market is going. We can't pinpoint exactly what's going to happen with interest rates and with the real estate market in general. So I always you want to be great. You don't have to be, you don't have to be great if you want to start, but you got to start if you want to be great. So you got to start somewhere, start doing something to kind of move yourself towards that goal. So
Jonathan, let me ask you a question. Let's talk for a second about zero down loans. What does that really mean? If you're a buyer, you say you get a VA loan and it says, I want to get a VA loan because there's no money down. Mm-hmm. Does that mean I don't ever have to come out of my pocket with anything, or what does that actually mean?
Well, so a zero down loan, there's a lot of misconceptions about it. And what it truly means is that you don't have to put any money down for the down payment. Remember, there's two sections to money that's coming out of your pocket. There's the down payment, and then there's closing costs and prepaids and fees that are associated with just closing on a home. And so a title company would have to get paid, a lending company would have to get paid, you would have to pay to get an appraisal if you're financing it. If you're escrowing your taxes and insurance, you're going to have to pay for your first year of insurance and put some taxes away to go towards closing costs. So a VA loan, a USDA loan, those are true zero down loans where you don't have to have any money for the down payment, but you do have to cover closing costs, or in some cases, if the seller is willing to pay for part of the cost, then you can get the seller to pay for closing costs. So there are restrictions on that. There's certain percentages. There's only a maximum amount of seller concessions that a seller could potentially pay for you, but yes, the USDA loan, which is in rural areas, and if you're here in Fort Worth, then a lot of on the outskirts of our city is USDA eligible. And then of course, if you're a veteran, forces, you can maybe do that too. Kind of just depends. There's all kinds of restrictions on that. That is a zero down loan.
Okay, great. So if I want to do, say maybe a conventional loan, I'm not a veteran or anything, but I want to do a conventional loan. Do I have to put 20% down? I mean, is that always the deal, or?
No, not necessarily. So 20% down was the general rule of thumb years ago, but nowadays they've opened it up to be a lot more flexible. So for a conventional loan, the absolute minimum down payment is 3% down if you are a first-time home buyer. So if it's a $200,000 house, you're talking about $6,000 as a down payment. Traditionally, it's kind of more like 5% for most people. If you're not a first-time buyer, 5% is kind of the minimum. And then on an FHA loan, that's the government-insured loan with HUD, that minimum down payment is 3.5%. So, there are some perks to putting 20% down, but it's not absolutely necessary.
Okay. Another thing I wanted to know is, is there any way that, I can just not pay anything out of my pocket when I want to buy a house? I don't have any cash, any extra cash, without selling, my prize bull or something. We are in Texas. So, are there any options like any down payment assistant kind of programs? I know there used to be some, maybe they've been suspended, or, maybe something about, you can help share that with us.
Yeah, so there are lots of great programs out there for first-time buyers. Unfortunately, mortgage companies like the ones that I work for and a lot of other mortgage companies, just because of the way that those loans are structured, they've been suspended for us right now. We don't know exactly. It could be a few weeks, could be a few months, maybe years, we don't know. But traditionally, no, you would not be able to just walk into a house and buy it without coming up with some money. So it's, and Greg can get into detail more here, but you always have to put something, a deposit down called earnest money. You're always going to have to pay for an appraisal. You're always going to have to pay for your inspection. So it's very rare to be able to get into a house without having to come up with any money out of your own pocket.
All right, Jonathan, if they want to get with you, what's the phone number they call, or how they can get it with you? What's your best contact?
Yeah.